Charts and options flowing high, stakes are rising, watch them fly. Natural gas, a wild ride, in the market we confide. Commodities, silver, gold, traders' dreams, tales we told. Futures contracts never fold, in profits we behold. Buy low, sell high, money stacks, touch the sky. Market waves, we glide, in trading we reside. Bulls and bears, we ride the tide. Candlesticks, can't hide. Gas and metal, side by side, where fortunes often collide. Leverage margins, risky play, day and night, no delay. Dip and tick, every day, watch the numbers sway and sway. Brokers scream, they light the night, every tick a gamble right. In this game we found the light, trading life, our appetite. Buy low, sell high, money stacks, touch the sky. Market waves, we glide, in trading we reside. Bulls and bears, we ride the tide. Candlesticks, can't hide. Gas and metal, side by side, where fortunes often collide. Bulls and bears, we ride the tide. Candlesticks, can't hide. Gas and metal, side by side, in trading we reside. Bulls and bears, we ride the tide. Candlesticks.
Good evening, everyone. I'm James. Welcome to the live stream. If you haven't been here before, that's who I am. I'm James, and this is ArcisFX live stream. Welcome to everyone that's here. We're a little bit early. I normally start a few minutes early just so that I can make sure the sound's good and everything, and that I can greet everyone that's here. And so I'm going to start with you, Michael, or Mikhail, or Micah Polanski. I'm afraid I don't know how to do that, but it may be possible to translate or dub into Polish. But I think I suspect that it might not be that simple on YouTube, and it might have to be done post edit or something like that. But if I can do that, I will do it for you, Michael. I promise. I'll try and do that for you as soon as we finish, but I don't have the technical skills to do that right now. So yeah, so just saying hello to everyone. It's lovely to see you. Vikesh, the gas giant, always here. Good morning from America. Good morning. Breakfast in America, Sean May in Cali, I think. Emil, nice to see you, mate. An amazing song. Yeah, it's my natural gas song, one of my AA songs. Actually, I have an AI library related to trading, which you can access. I'll give you the link. Just put the question up in the comments if you'd like to hear, or if you want the link to my AI trading song library, make a note in the comments section below. Not here in the chat, otherwise I'll forget. Hello, Ashk. And KL Rank, nice to see you. So lots of folks in here already, and it's good to see you all. We will start on time in about 5 minutes time. And as usual, I'm going to go through a couple of the notes very quickly, and then I'm going to go straight into the charts. And then right at the end, I'll take your questions. I'll probably start with crypto just to get going because it's live right now. And that market is, there's a couple of things happening. And then we'll look at energies, oil and gas. Natural gas last week was unbelievably slow and boring. And you know, we made no money the entire week on natural gas. So what's going to happen this week? We'll see. And we'll talk about oil, and we'll talk about metals too. And then of course the stock markets. Big reversal on the stock markets and crypto on Thursday and Friday. So interesting times. And everyone wants to know, are metals going to go up or down from here? And is crypto going to go up or down from here? And stocks for that matter, I suppose. So I've got my Red Bull racing mug ready to provide me with not Red Bull, it's Coke Zero vanilla flavor this time. So welcome everyone. Please make yourself at home. If you've got any questions, type them up, and we will get going very, very shortly and get right into it. Good day, Martin. Nice to see you. I hope you're doing well. I hope you had a lovely weekend, Martin. I always enjoy you in the private group saying goodbye and good morning every single day without fail by name. So I appreciate that very much. And you're one of our greatest fans in the private group. So I appreciate that very much, Martin. Greetings from Poland. Your names are very difficult to pronounce in those parts of the world, but I'll give it a go. Znetsk, Znetsk, or Znetsk, something like that. Welcome to you too from Poland. And I hope I haven't missed anyone out. Larry, nice to see you, mate. Always good to see you. Larry, you haven't seen you for a while, actually. It's nice to see you again. All right, folks, so we've got a couple of minutes just to hang out and get your questions up early, and I'll get to the earlier questions first. So, once we get to the end of this session after about an hour, there are hundreds of questions, and I can't get to them all. So if you put your question up first at the top of the list, it will get dealt with. So Emil will talk about natural gas and answer your question. Well, I'll call you Zibby. All right, Zibby. Zibbity it is. Zibbity dibbity it is. Zibbity. Zibby. All right, wonderful. Kiran. Oh, Kiran. Oh, wonderful. Thanks, Kiran. Nice to see you, mate. All right, folks. The danger of starting early, of course, is that I start way too early, and then we have nothing to say for the next 2 or 3 minutes. But I'm sure there's lots to say, lots to talk about. Kieran from the private group. Thoughts on XRP? Sure, Sean. Interesting thoughts on XRP, actually. All over crypto, there are interesting thoughts. And another one from the private group. Hello, Ruchi. That's nice to see you too. Thanks for all of you being here. I appreciate that. So let's get started, I think. A couple of minutes to go. I'm just going to switch across screens, I think. I'm just going to check all the screens are working. Give me a second. Live stream. We'll look at the natural gas COT report. I'm going to look at 3 COT reports today. We'll look at natural gas, what's going on, where are traders looking. And actually, we've got quite good COT reports because they recently updated on the 3rd, I think. Let's just check. I think we got the last update on the 3rd. Where does it give us the date? So that's natural gas. And then we'll look at gold as well. There's some interesting moves on the COT report on gold, of course, aligned with the movements in gold, and then silver. So I'm going to look at all 3 COT reports on these 3 instruments, gold, silver, and natural gas. And then we must look at the natural gas weather report as well. Now, we'll get some more updates a little bit later on in a few hours' time. But so far, it's a bit mixed still. And it was mixed the whole of last week. That's why the market didn't really move much. And just a reminder, if you do not follow me on X, you can do so now. In fact, you can watch the stream live on X at the moment. Welcome to all of you on X who are watching live. I appreciate you watching too. And follow me on X. It's just ArcisFX. And click on the follow button. That's all you have to do. It's free. And I post up a lot of updates during the week on X, which I don't put to video. So text updates, graph charts updates, all that sort of thing, and news snippets, anything that's affecting the market in the moment. So you can go and get me on X. And of course, if you're not a member of this YouTube channel, it's not the same as being a member of the private group. If you're not a member of the YouTube channel, there's a button just below this video that says join, and you can join. It's about $2 or $3 a month, and you can get access to the private videos and the private content and a whole bunch of other small perks, not great perks, not life-changing perks, but you'll be part of our community and also get access to the private stuff. And of course, if you want to just join our private group, there are links below for that too. And if you don't want to do any of that, at least just subscribe to this channel and click the like button. That would be great. Thank you very much. I much appreciate that. So whilst we're waiting for the last couple of people to come in, I'll just make sure that all is looking good. Now, let's have a look at who else has popped in just before we start. So we're going to look at XRP. Yes, we will, Sean. Ruchi from the private group. The boring channel. You're going to be grumpy again, mate, today? I'm joking with you. There's always something you don't like, right? But it's okay. I understand that. There's a lot of things I don't like too. Always looking for nuggets of wisdom from the maestro. Thanks, Vishesh. That's why we're here early. Yeah. So you do get a little few nuggets in between before the stream starts. Some light on natural gas. Yeah, we're going to look at natural gas, of course. We trade that every single day, Ruchi. It's one of our main instruments that we trade in the private group. And it's been below zero here all week, cold. Yeah, there's been a bit of a cold snap, but Best wishes from Folkestone. Wow. Wow. Now, Simon, here's a very interesting fact. For about 20 years, I lived in a road called Folkestone Road in South Africa. A lot of the street names in this beachside area are named after British towns. And being English myself, I know all where these places are. And I used to live in a road called Folkestone Road. So it kind of reminded me of a little bit of England and why I got out of England, I suppose. So that's another bit of a joke. Don't take me too seriously. Now, folks, I'm going to go across to the notes and get going right away because the clock has ticked over. So let's get going. So welcome to the live stream. Please do make sure to like and subscribe as we start right now. As I'm talking, these next few sentences, just click below the video, the like button and the subscribe button. That's all I'm going to ask you today. Now, live stream notes. I'm not going to go through all of this, but they once again will be up in the private group for your reading content. And we're just going to talk about, I'll pull out a couple of points here. I don't want to spend a lot of time. These live streams are going a little bit too long. Last week was almost an hour and a half, and the week before that was like an hour and 15 minutes. And so we get caught up a little bit. I don't want to spend too much time because people eventually get bored and want to do other things on a Sunday, particularly if you're in the US. You've got the whole day ahead of you. It might be a lovely day down at Newport Beach in California, day just starting, or it might be a great day for a lunch date in New York City, lunch just starting shortly. So you don't want to sit here all day. All right, let's go through. Now, so the macro regime really is this constant theme of debasing fiat currencies, fiat currency, basically, I don't know how else to say it, diluting the value of fiat currency and asset appreciation as a result, and probably inflation too. And I think that's really the overall, in one sentence, macro picture. We're going to see asset values increase, including stocks, Bitcoin, metals, possibly energies too, all assets, including probably commodities as well, as the dollar loses ground against everything else, not necessarily against the euro or the pound or the Swiss franc or the Aussie dollar or the Canadian dollar, but against stuff, assets, gold, silver, metal, energy, housing, whatever, anything that you invest in will, I think, we're at this sort of point where these are increasing in value at the expense, at the cost of decreasing currency. Now, we've got a new Fed chair, Kevin Walsh, coming in. This is a surprise to the market, and I think it also chucked the markets down, including crypto. Now, a lot of people are blaming this bloke on the crypto crash down to 60,000 on Thursday night, bouncing out on Friday with what looks like a breadth thrust to me, not just on crypto, but across various markets. And we looked at MSTR, a 10% rally on MSTR, which often front runs crypto. So a lot of this crash, people have blamed the appointment of, very strange actually, Kevin Walsh as the next Fed chair, who's a bit of a hawk. And he's worried about overfilling the balance sheet and being overly aggressive, etc. And so the market maybe reacted as a result of that. I don't know. It's put certainly into the pot. So keep that in mind. We may not have a Fed chair who does what we think he might be going to do, or that Donald Trump wants him to do. I think that's unlikely, though. He wouldn't have appointed him if he wasn't a yes man, I'm sure. Right, economic news. What mattered last week? Violent cross-asset positioning. So we've got gold and silver to the moon and then back down to the ground, crypto to the ground, stocks back down and then all the way up again on Friday, and then energies all over the show. So a bit of a blow off and then a collapse in precious metals and a rippling across the broader markets into crypto and stocks. So once again, this surge into what would be considered safe haven assets, not so much silver, although silver benefits from a massive industrial demand. There's nothing left in the COMEX, apparently. So we've got all this paper silver being traded on the CME and other places and ETFs and so on. And yet there's no silver in Fort, whatever the Fort's called, CME. So we've got an interesting week coming up, and we'll look at the COT report on that. But so, yeah, flooding out of fiat currencies into assets, cross asset risk appetite. So in other words, I think we've got a risk on process beginning, or at least I think it's already started quite a while back. Now, I'm not going to read through everything. Some of the stock sectors that you might look at in this new environment, tokenization of equities, read through that, see what you think about all of that and how that might affect the markets and your trading activity and your sanity. And then metals, of course, the deep dive, massive rallies and then a collapse. Gold, the anchor that still whips around a bit, but doesn't look too bad, actually, gold. We'll look at the charts. Gold, a bit of a subdued pullback compared to silver. Silver got down to a new low. Gold didn't. Gold came down to a Fibonacci retracement, bounced, mutedly, admittedly. Silver came down to its Fibonacci retracement, bounced, and fell back down to the next level. So much more violent. Gold, if I could squiggle it up in as like an air pen, gold, I think, and I'm stealing this from one of my favorite analysts on YouTube, who happens to be a colleague of mine, a friend of mine, and you'll know him well, not one of the bad ones, one of the good ones. And he drew a little picture in front of his camera like I'm doing. Gold will tend to do this over the next year or two or three. I think it's going to be a slow melt up and a climb, whereas silver will do the same thing, but with a lot more zigzaggy movement, blowing out through the top, collapsing down lower than gold, much higher, more oversold, more overbought, oversold, whereas gold will be more steady. That's the normal way it goes. We'll look at the levels. I've got them written up here, but we'll look at them on the chart. Bitcoin dropping to 60K on the dot, which is precisely, not quite, actually slightly below, but only fractionally, the 50% retracement of the entire move up from 0 to 120 back to 60. That's the entire Bitcoin story. We've come back halfway. It's a long way back, but it's the best place to be for any asset on a retracement, especially when it reacts so violently. I'm not saying that 60K is going to hold, but I have a damn good suspicion that it will. And there's a lot of FUD in the market about Bitcoin. We'll talk about it when we get to the charts. I think we've got a real chance here of 60K being the bottom, or at least very close to it. Maybe a tip through there, make a new low, take out the liquidity. Imagine the massive buying, and I believe, I don't know if it's true, but I believe that there was, it's probably not true, but there was some buying by the Treasury, the US government, to put the Bitcoin Treasury into a better place at a cheaper price. And of course, Michael Saylor, lots of people have been buying. That means a massive liquidity floor, if it's true, if there was, and obviously there was massive buying because that bounce wouldn't have happened otherwise. Is it going to hold? Or does that liquidity floor need to be cleaned out, taken out as the last thrust of the knife through the heart? Right, natural gas, deep dive, weather models, bear flag, breakdown. Someone mentioned that in the chat a few minutes ago, and I appreciate that because actually my notes say exactly the same thing. And I think someone asked about a bear flag, some liked on natural gas. It doesn't matter, I'm not going to read through it now. I can't find the questions. Very difficult to find the questions on the software. But it's a bear flag. It's broken down through the bottom, but all hope is not lost. We don't really have a position on natural gas. Very tiny, long on the ETF, spot ETF, but almost nothing on the futures. A 10% position, very tightly hedged. So basically nothing. So I don't know. We're going to have a look at it now. The market will open in about 4 hours' time. We will get more weather reports coming out before that. And we will either gap up, gap down, or do nothing at all. We'll look at the chart. By the way it looks right now, we may gap down. I don't know. We'll see. So weather driven, a lot of this is about, weird fluctuations in weather. We had a bit of a storage shakeout, that sort of thing. But that's all that. Now, folks, quickly, I'm going to go cross through here. I'm going to come back to these charts, but these COT reports. But I want to go through the COT reports for natural gas, gold, and silver quickly with you right now, and zoom into this and just have a look at what's going on. The date that this was printed was, I think, the 6th of February. So this was printed on Friday. So it's very, very current. And this is natural gas. So this is the latest COT report as of Friday. Let's have a quick look. Now, I'm quickly going to go back to check my software, make sure everything's running. Please let me know if you can hear me well and if the image is good. The picture quality, is it good enough, folks? Let me know. And if the sound quality is good enough. I did a live stream on Friday and nothing was good enough. The picture was bad. The sound quality, I think the sound quality was okay. But please let me know before I carry on. Quickly type it up if you can hear me and if you can see me properly, or if there are any visuals going on. I'll come back to that chat, but please type that up quickly for me. And then I'm going to go back to this now. Let's quickly have a look at what's going on. So this is from Friday, and natural gas has done this. This is how traders are positioned. First of all, commercials, we have 630 contracts long versus 457 short, adding a little bit to the long side, adding a little bit to the short side. a little bit more to the long side actually than the short, and slightly longer than short. So if anything, and if they're not hedging, slightly biased long. Producers, and that's quite a lot, by the way. Those are big position sizes, over 600. Producers, 294 long, 258 short, adding 26 to the long side, 15 to the short side. So basically balanced, and not nearly as big as commercials in terms of sizing. Let's come to managed money. That's the funds and traders. 170 long, 170 short, subtracting 4,000 from the long side, but subtracting 26,000 from the short side. In other words, managed money, hedge funds, etc. People that manage money. I used to manage money, so I used to be in this crowd, and they've swung, if anything, slightly to the long side, having taken more short contracts off on a balanced book. Something's it's just refreshed. All right, so that's it. So managed money, if anything, swinging slightly to the long side. Non-commercials, 215 long, 370, 387 short, so more to the short side. You can see it's a mixed picture. Swap dealers, the hedgers, to the long side, expecting it to go short, equally balanced in terms of additions and subtractions. Other reporters, probably retail traders mostly, and quite a big book here actually, 217,000 short for retailers and only 44,000 long. So retailers heavily balanced short, but the managed money, not so much. In fact, if anything, equal, but swinging to the long side. So perhaps the retail traders have got it wrong, got trapped. I don't know. We'll come to the charts shortly and discuss all of the charts in that light. Now, I want to look at gold quickly. I don't have the paid version of barchart.com anymore. I discovered that the free version is just as good if you don't mind flashing away the adverts every now and then. So this is now gold. Let's have a look at a bit of traders. And this was as of the 3rd of February. So it's a little bit outdated, about a week old. And remember, the 3rd of February, let's go to the, let me just quickly look. That was on, I'm going to quickly look at my chart, which you won't be able to see, but I just want to see where that is in terms of on the gold chart. The 3rd, when that was in terms of, so 2nd of February, Monday, the 2nd of February and on that weekend too, was when gold and silver crashed. And on the 3rd of February, which is a Tuesday, gold and silver both started to rally. Okay, so that's more or less when this COT report came out. Let's go back to the COT report. So this is just after we reached a bottom and started to rally. We're still pretty low, pretty near the bottoms when this report came out. So let's see where people were positioned. Commercials, 87 long, 295 short on gold. 87 long, 295 short. Producers, 14 long, 38 short, taking a lot off the short side, both of these though. Look how much we took off the short side on the commercials, minus 48 compared to minus 8 on the long side, minus 16 compared to minus 500 for the producers. Managed money, 118 long, only 26 short. The managed money, you might call them the smart money if you wish. I don't always call them the smart money, but they're very long and almost and not very short. Although they did take some off the long side, 24,000. Remember, this is just after the crash. And so they've just covered some of those longs probably and added a few more shorts, but overwhelmingly biased to the long side. Non-commercials, overwhelmingly long. Swap dealers, overwhelmingly short, but these are hedges, so that you'd expect. And then other reportables, people like you and me, 95 long, 22 short, so also biased to the long side. But after that crash, long covering rather, or short covering, taking those shorts, taking the longs off, and getting rid of those long contracts, 13,000, and adding some shorts on. So a bit of chaos and a bit of consternation around those moves. Now let's go to silver, and I'm just going to scan through this one super fast. Now silver, commercials 35 long, 80 short, so pretty short. Producers 4 long, 23 short, pretty short. When this came out, this was just after the crash, remember? So that a lot of this is switching from long to short. Is it the right idea to switch silver to the short side? Is it the right idea to switch gold to the short side? Or, are we going to carry on moving up, or are we going down? We'll look at the charts. I think they may have got it wrong, to be honest. Managed money, 13 long, 8,000 short. Almost just not trading, right? Out of the market. Not much going on there. Non-commercials, 38 long, 13 short. Swap dealers, to the short side as they're hedging, so they're expecting to go long too. And other reportables, that's people like you and me, 26 long and 4,800 short. This was just after the crash, and the retailers were buying and the managed money was selling. Retailers were buying the crash, buying the dip. Retailers were selling the dip. Managed money selling the dip. Retail traders buying the dip. Super interesting. Now, natural gas weather, quick scan through here. This is the 5th to the 11th. Today is the 8th. So this goes into Monday, Tuesday, Wednesday. And the report here says chilly weather systems. Chilly will sweep across the Midwest and Northwest throughout the weekend with highs of the 10s to 20s, then warming next week, mostly into the 30s. So chilly over the weekend. As someone said, it's very cold right now. And then warming on probably Tuesday, and unsettled really. And what is built in here? Now let's look at the map. There's a big cold bit in the middle there, but it's rapidly being pushed aside by an encroaching warm front here to the left-hand side in the west coast. So I don't longer subscribe to this. So I can't get into the deep dive here. I don't really need to. I just know that it's cold at the moment. The weather's going to get warmer. Let's see what the charts look like. And then finally, as a reminder, please follow me on X. Go and check out ArcisFX. Follow me there and make sure to subscribe to this channel. And having said all of that, I'm now going to switch across to I always get this wrong. Stop screen. There we go. I'm going to switch across to the charts. So folks, let's get straight into the charts. And that should have popped up. Perfect. All right. Are we doing well? Is everyone doing okay? We're all good. Okay. Fantastic. Let's get into the charts, folks. This is going to be super interesting and super important for the way you trade this coming week and months that lie ahead. I'm going to start with the dollar. And my contention on the dollar, and I'm going to go to the day chart, and I'm prefacing it with the dollar because the dollar affects everything. And I'm hoping that my internet connection is not failing. The dollar chart is loading very slowly. I don't know why. I hope there's no issue with the internet. There we go. All right, there might just be trading view. So here's the dollar. The day chart, we have a double bottom over here, and we bounced off there twice. We didn't make much progress on any occasion, and we've now reached that level after making gradually lower lows, bouncing through that level, big move down, sharp bounce out, V-shaped recovery, back to the underside here of the 20-period moving average and the cluster of other moving averages. We got short over there on Friday, last couple of days ago. Remember, we've got the NFP this week, non-farm payrolls. That's, I believe it's on Wednesday this week, not Friday, I'm not sure, but I'll check. It's either Wednesday or Friday, and that will affect all the markets, but particularly the currency market and the dollar. My contention is that the dollar has now broken down through this double bottom, even though we had a sharp rejection from an oversold RSI. We only came back into the moving average cluster, into the center between this Bollinger Band squeeze, which means that we're expecting a violent move on the dollar anytime soon. It's either going to be up or it's going to be down, but it's going to be violent because of the Bollinger Band squeeze. When you see that pincer movement, crab claw, lobster claw, over here on the Bollinger Band, this 200-period Bollinger Band here on the day chart, you know that there's going to be a violent, explosive expansion move. It's a regular thing. All right. Now, I hope that you can all hear me. I haven't had any response to my queries about the maybe slowness of the internet. So please do let me know that it's not all lagging. So I think the dollar is moving down. We weakened that bottom, and we're due a violent move. And I expect, because of this Bollinger Band squeeze, that it's going to happen fairly soon. And when it does happen, it's going to propel this market quite rapidly. And I think we'll move down through the bottom here and carry on moving down now that that bottom is being weakened. Okay, it's all good. Thank you, TDC. All right, so I'm expecting a weaker dollar, folks. That's basically what I'm saying from this chart, and I've shorted it. So I'm not just expecting it, I've taken action on it, and I'm now short the dollar. And generally this next number of months and this year, and it's just a decision I've taken because the market's become so complicated and so violent and so precarious, and it's a difficult year we're going to be facing. There's going to be, I think, a violent rally across various markets. And then at some point, maybe not this year, maybe next year, but towards the end of 2026 or early 2027, we can have a violent correction in the markets. I think that's my suspicion. And there are various reasons for that. But until then, I think we're going to see dollar moving down and everything else moving up. I'm trading the dollar index, actually literally trading the dollar index. I'm not trading the euro, not trading the Swiss franc or the pound or the CAD or the Aussie dollar or the Canadian dollar or any of the other things, or the Japanese yen or the New Zealand dollar. I'm trading the dollar index, and it's made my life a lot more simple because I don't have to worry about all the cross pairs. I've got a single index, much like trading the NASDAQ or the S&P, representing the dollar against a basket of 6 other currencies. You can go and look that up on Google or ChatGPT, find out what they are. Mostly the euro, the yen, and the pound. And so I'm trading that. I'm short on the dollar, and that means I expect alongside that everything else to move up. Not because the dollar is moving down, but it's part of the picture. Right. Now, that's the dollar. Now, I want to talk about NASDAQ and S&P. I was of the idea, after having broken down through this triangle top, the moving averages, we're still below all of them, and my point is still valid, by the way. We've broken down, we bounced off this point of control. Well, it's not the point of control, it's the gap in between the point of control. In other words, the volume gap that we just filled in a little bit more, which is always a good thing. And we bounced out of there, and I got long. We were short, as you might have known from my comments on Twitter and in the private group. We got short on the breakdown, and I got out on the bounce, took a very tiny profit, and we got long as a result. And now we're long and in profit on the NASDAQ. We're approaching the apex of this triangle and the moving average cluster. It's not going to be easy to get through here, and it's a real problem. And I'm not saying that we've now turned into an utterly bullish market until we get through there on the NASDAQ and close above there and close above all the moving averages. The 20-period moving average is above the 50 right now. It should be below. So we've got to get above the shorter-term moving average. And before we do that, we'll get through the longer-term moving average. The 200 is way down below here, and that might form the division between a bull and a bear market, the 200-period simple moving average. Look how we got oversold on the RSI, which is good. That was my initial target if we were to break down. And if we do break down, we might not get through that blob there after making a double top. And we might go down. I don't think so, though. So I think the dollar's going to go down. And I think we're going to see just a general swing out of the US dollar into some of the American assets. So, and I think that'll be good for everyone, not just the US. I think it's good for world markets with a slightly weaker dollar. So I don't know what's going to happen, but I am long on the NASDAQ from that green arrow. And I'm hoping that we'll get a bust up through that blob and a hold above all of these lines and moving averages and move up. If we do move up, I think my target, and I mentioned this in the last video, is at about 28.5 up here, up near the top 200-period Bollinger Band, which is actually curling down. Another not good sign if you're particularly bullish on the NASDAQ. So we're long, we're in profit, but we're not, certainly nowhere near getting out of danger here on the NASDAQ. And the same goes for the S&P. I'm not long on the S&P any longer. I'm out of this trade, and I'm waiting to see what happens. We're at the similar sort of level on the S&P, right up into this moving average cluster. Well, it's just 2, and the horizontal resistance line, which was a double top prior to that, and it's been a consistently important line. We could move it down a fraction, I guess, down to about there, something like that. So that black line, we're just stalled just underneath it right now, plus the 20 and the 50-period moving averages that we've got to get through. Not laggy, and the sound is good. Thank you, Simon and Nell. Thank you very much. And Dennis. I appreciate all of your comments. So that's it. Now, we did not get an oversold RSI here on the S&P, and so maybe that's still required, but we did get it on the NASDAQ. All right, so that's stocks, and as a result of that, now I'm long on many of these names. I'm not long on the German 40 anymore, but once again, like the others, I might get long, depending on how the NASDAQ and the S&P and the markets in general start behaving next week. And crypto might have been a front runner to all of this, bouncing out so dramatically with a 10% candle, 10% bounce on Friday. And that might be front running some of these things. German 30. Don't like the way the 20 period's curling down. That's this green line. But, if we can get up through there, maybe something there. I want to point out Look at all these stocks. Look at NVIDIA, massive rally on NVIDIA from 173 to 185. Netflix even got off the ground a little bit, believe it or not. And then MSTR, Tesla, beautiful bounce, nice reversal candle. Coin, beautiful gap up and engulfing candle. But the winner of the contest for the most popular reversal has got to be MSTR, not because so many people are invested in this, and it's been such a big story. And with Bitcoin dropping through MSTR's average price on Bitcoin at about 73, we're still below it. We had an earnings call, and I think it wasn't great, but it wasn't. They didn't go bankrupt; they're still there. And Michael Saylor's ever calm and catatonic approach to the whole thing seemed to have made investors feel fine about it. All right, so we got revenue is up, earnings per share down. But look at this candle on Friday. First of all, we got a big bounce on the Thursday, and we slumped back down again. But on Friday, we moved up all the way from the purple line, which was kind of my line in the sand. Although I bought the line on the line in the sand, my last tranche at the purple line, we dipped down, but gapped up. And of course, if we'd stayed down there, I would have had to hedge my entire MSTR position. We've got an oversold RSI, and we bounced out. And this is a 10%, I think it's a 10% candle, maybe more actually. And this is why I say sometimes MSTR front runs Bitcoin. And so from the bottom at 100, 104 up to where we closed, well, the highest point on Friday was at 135. It's a 30% rally on MSTR from the bottom, 30% with a shaven top and a shaven bottom, a very, very, very bullish candle. And that is not likely to reverse easily. Of course, we've got to get up through the rest of it. And we've got loads of resistance, particularly in this zone here at the point of control, moving averages, and massive months-long cluster of dead price movement. But if we can do that and close above that purple line, more or less, this top line here, I think MSTR might be telling us that Bitcoin could be okay and that we could be looking at a big rally on Bitcoin. Now, let's see what happened on Bitcoin. And I'm going to throw some caution straight at you to begin with, because although, look, what I've written here, such a clear bottom, but the FUD is real. Everyone has it, including me. FUD, fear and doubt. And we don't know if this bottom is going to hold, if the low here has to be cleared out because of the massive volumes that went into driving this up. Let's see how far we got up. Let's go to the day chart. Actually, we can start on this chart. Let's see how far Bitcoin rallied. Remember, from the bottom, MSTR rallied 30%. Bitcoin rallied, I think, 10%, 19%. Oh, from the very bottom, 19%. Is it possible? 18%. All right. So Bitcoin rallied 18%. MSTR rallied 30% from the bottom. And stocks and everything rallied a couple of percent. So, and gold and silver rallied a couple of percent. But the biggest winner of them all was MSTR. And I think that is a really good chance that MSTR is showing the way here and pointing out that Bitcoin will probably hold this low. Now, MSTR, let's go back to that chart, will have to come back a little bit, or it's going to just gap. This is what's going to happen on Monday, open of play or pre-market. This will gap up and keep moving up, probably to the 20-period moving average and the underside of this ledge. Alternatively, it may gap down and then shove up from a lower level and move on to new highs from Friday's candle. In other words, gap down and then start moving up. That would be better, actually, because we could start at a cheaper price and keep moving up, having at least done a little bit of a retracement, unwound some of the buying fervor and excitement. So I think we'll probably see a little gap down. Do we have any gaps down below us? We don't. No, so a little gap down and then a move up. And I think MSTR is leading the way and Bitcoin will follow. I'm feeling a lot more confident in Bitcoin after watching MSTR's performance. However, let's have a look at this on the day chart and then the week chart. That's the 4-hour you've just seen. This is a very, very, very clear reversal candle. There's no denying this. But Bitcoin recently has not been performing very well, not been behaving very well, should I say. It has not been performing, and it did go through a period when Bitcoin traded beautifully technically, and we could rely on things like wicks and spikes and engulfing candles and piercing patterns and gaps and the regular technical stuff. In this massive move down from the top, from 120 odd, 25, 26, 27, we haven't seen this behaving very well at all. There are occasions when we've seen technical levels in the macro picture, but when it comes to these spiky, wicky candles, very often they aren't holding. And so what I'd like to do is, and I do like the way this is holding, this is the big reversal candle. It's a classic technical piercing pattern reversal, making a new low and closing more than halfway up through the prior candle. And we're now holding that level really beautifully in what looks like a bull flag. It's the weekend, so we can't put a lot of emphasis on the movement from around about here at the top and all of these candles moving across there. That's all the weekend. So it's kind of nonsense. It's not meaningless, low liquidity, faffing about. But what I did notice that after the rally on Friday, yesterday, I think it was yesterday, was that Saturday? Yeah, so, well, Friday night, really, very, very late. We dipped down with one large 4-hour candle. Once again, it's the weekend. So these are not real serious candles. There's not a lot of volume associated with them. And it's sort of jostling for position in the weekend. But we dropped right down to the 38% Fibonacci retracement precisely. I found this fascinating. Not only is that precise, 38% retracement and a bounce out, creating the beginnings of what potentially is a bull flag after the massive rally. Let's go back to the day chart. There's the bull flag candle, the bull candle, which is a piercing pattern candle. And there's the bull flag forming. And we've got 2 days, Saturday and Sunday. Such a clear bottom. But the FUD is real. The FUD, F-U-D, fear and doubt. Now, let's have a look at the weekly chart. And this is even more interesting because on the weekly chart, we came back down to exactly the bottom of this level. Let's get rid of all this intraday stuff. We dropped through the 78.6% fib. We just about touched the 200-week simple moving average. Not quite. It means we may still have to touch it. And in case everyone's saying, well, the 200-week. Well, we've got to the 200-week. It's going to reverse. It has to reverse. It always does. It's always done that. Well, we don't have enough data because it's only been down there like 3 times before. Once, twice, 3 times. And in fact, on the second occasion, we fell through it. And on the third occasion, we fell through it dramatically. And we're there now on the fourth occasion, having not yet touched it even. And we're going on a sample size of 3, right? This is what makes me laugh about Bitcoin. They say, oh, in previous cycles, this is what previous cycles did. Well, how many cycles have we had? You need 30 cycles to form any statistical significance for any number. That's just how statistics work. So, 3 or 4 cycles, it's not meaningful. But let's say it is, and we've got to test that 200 period moving average. Let's see what price we've got to get down to, considering that we may fail this bottom, retest the liquidity there, and try and take those buyers out. They're not going to be successful because the buyers might be treasuries and people like Michael Saylor and the Trump family and a whole host of other people who won't be taken out, but there might be an attempt. That's this bottom here. Let's go back to the day chart. And I'm not saying this is going to happen. I desperately want to load the boat here with longs, but I'm not going to because I want to see a couple of things. First of all, are we going to retest this low? And if we do, how low can we get? I was talking about the weekly chart. Let me go back there. So there it is there, 200-week moving average. And on the day chart, let's quickly go back there. This is what we were looking at earlier, having fallen down, way down all through the moving averages and down through that order block, a little bit down below, but just into that 60,000, almost precisely, halfway down from the bottom to the top, 0 to 127, back to 60, not precisely halfway. Right, now, there's the 200. If we had to get down to that 200-period moving average, we would get down to 57.9. And if we had to pierce through there by some way, we could get into the low 50s on Bitcoin. And that's all assuming that we don't hold this rally. Let's go back to the day chart. And I'll finish with this on Bitcoin. Bull flag. And there's another one. There's a bear flag that failed. You'll all remember that. But it's a flag. It's a bear flag. Failed. Here's a bull flag, which is still in progress and building. But, we've only got 3 candles in that bear flag. And we've now got we've got 2 in the bull flag. So Monday will be the 3rd candle. This ledge above the bull flag and the ledge above the bear flag, and I've got lines drawn in there at about 72,000 and at about 79,000. Those are the 2 key levels. Once we've closed above 72,000, this yellow block, and there I'll start to feel a bit more comfortable, add some more size. Once we've closed above this one, I'll feel more comfortable and add even more size, and then even start unhedging my shorts. In other words, taking profit on the shorts, getting rid of those, and I'm short from 90,000, 87,000, and 85,000. All of those shorts are still running, and if this market moves down, those shorts will put me into further profit, but I've also got longs on now. Not as big as the shorts from the bottom, but they will be moving into negative. Be very, very careful, folks. I don't want to see any further destruction of crypto accounts any further. Now, I've got to talk about metals, and I've got to basically treat them fairly separately because they're behaving differently. This is silver. Now, silver has made 2 legs down and has bounced after the second leg, an ABC corrective wave. And we've bounced off that level, which is very, very close to the 78.6% Fibonacci, the last chance Fibonacci. There's the move up and the correction down. We didn't quite get there, so we may have to still get there. That's at $61. We're currently trading at 77. And I don't know. I have an idea that we might see this moving down. I want to remind you that we looked at the COT report of this earlier, and I will remind you what the COT report for silver showed. I'm going to quickly go back through these numbers, and I'm just going to read them out to you very quickly on silver. And we have, just trying to get rid of, we have very, very light positioning, actually. Commercials are 35,000 short, 35,000 long, 80,000 short. So they're weighted to the short side. Producers, 4,000 long, 23,000 short, weighted to the short side. Managed money, 13,000 long, 8,000 short. They weighted to the long side. They could be wrong. And then non-commercials, weighted to the long side. Swap dealers, weighted to the short side. They're hedgers, you'd expect that. And then other reportables, retail traders, heavily, heavily, heavily weighted to the long side. And that's a problem, as I said to you earlier. The retailers are all long here, whereas the commercials, producers, and hedge funds are not balanced or even slightly long. And I think that means that we may have to go down to at least the 786 fib, which is $61. And, we might have to go all the way back down to retest the breakout from this double top. I'll draw a line across there. Would not surprise me. I know there's a terrible shortage of gold in the exchanges. There's the black line, right? Double top, there it is there. That's the double top breakout for silver. And we've come back down almost 80% of that already, not quite. We may have to come back all the way down if the 786 fails. I'm hedged on this. I have no, I'm long on this, but I'll hedge in a fraction. If this doesn't keep moving up, and of course we've got resistance here at this last swing low, which created the bounce after the drop. So that's a massive resistance and point of control at $92. It's also with 100 and the 50 period moving averages. So I'm long, but we have a complicated situation here. I've got hedges. I've got a position from the top. We've got short at the top. We took profit at the bottom. I'm long still from halfway up. I'm looking to either get long or short. I don't know. It's a very, very messy picture. And when you consider that the CME will literally run out of silver in a few days or weeks' time, and we don't know how they're going to react in terms of increasing spreads, how players will react, what the market's going to do. So I don't know. Be very, very cautious with silver. I suspect we may have to go lower still. However, it will depend a lot on gold. And if gold, and it has done beautifully so far, this is a 4-hour chart on gold, and we're long on gold from that bounce. Very simple. We came down, bounced out, retraced the 200 period moving average on this 4-hour chart, and it's also a Fibonacci retracement level. We're still within the channel, but we are above the channel center line now, so we're no longer diddling in the lower half of the channel and moving up. On the day chart, we're long on gold, so if this moves up, we'll make money. If it doesn't move up, we won't. But we've been long a lot on gold, and we've been short sometimes as well, but mostly long out of this big breakout triangle. And I've always keep that breakout triangle on my page. I have a suspicion one day we may have to come back down there. You never know. If we get another breakout level here where my blob is, I think we'll definitely come back. We almost did get back down there. But look what happened. The bounce out of the channel bottom 50 period moving average. This is gold. We got long there. We got out hedged. We took profit at the top. We've got long again now on the dip back down, and we got long based on the dip back down within the channel at the 200 period moving average, and we've now bounced above the channel center line. We did also get an oversold RSI on the 4-hour chart. Right. The video might be, yeah, I don't know, folks. I think it's probably StreamYard. StreamYard, almost everyone uses this software nowadays. There's another one called Streamlabs. I used to use that, but almost everyone uses StreamYard. Even the big streamers, with millions of followers, they use StreamYard. And I think sometimes they're a bit oversubscribed in terms of bandwidth. That's all. So sometimes it's laggy. On Friday, it was very, very laggy. And it wasn't just me, it was other platforms. So gold, I'm already long on. Silver, I'm already long on, but from much higher up. And the reason I'm long on silver from miles up in the stratosphere here is because we were short at the same time. So we've taken profit on the shorts and somewhere down here. And now I'm waiting for these longs to, we'll get back there at some point, I'm sure of it. I don't know how long it's going to take. And so in the meantime, I'm holding on to that long. We've taken a load of profit on the shorts, but I don't know if it's going to carry on moving up. Of course, now we've got a trend line. We're actually in a downtrend now. So until proven otherwise, although gold is not, remember, we looked at gold chart, it's still in an uptrend. Silver is in a downtrend, and we have a trend line now that we're busy testing as we speak. So it's not much of a trend line, only 2 touches, and it's very steep, but still, we are trying to get through there. And notice that the 20 period moving average is there too. So a strong push up through there, and there's the 200 and the 20 and a ledge and a double and a previous swing high. So if we can really get some momentum, I think that silver price has to go up. There's no silver available, and we need a lot of silver for all sorts of things, plus as a hedge against fiat currencies. So there's a double whammy supporting silver, a triple whammy really. Demand for silver in industry, demand for silver as an asset, as a precious metal, and also the fact that there is no silver in the vault. And so this is we're entering a silver crisis. The best conductor in the world is silver, followed by copper. Right. And then platinum looks like it's bouncing out as well, actually. I don't trade this, hardly ever, sometimes, but that looks pretty good as well. And, if all the metals look good together, that's always encouraging. So platinum looks good. We're also long on copper. So I'm long on copper, silver, and gold, but not platinum. Copper looks good, double bottom through the 50. This is the day chart. A nice, beautiful piercing pattern, reversal candle as well on copper. Same thing here on platinum, not quite a reversal piercing pattern, but similar. And gold moving up and silver moving up. So if they're all moving up together, that's good news, right? So, if one of them was a rogue runner and the others are all a bit droopy, it wouldn't be so good. So I think there's a pretty good chance that all of these will move up simultaneously. And as a result of that thought, I'm now long on gold, in profit on gold, out of the profit on silver, because we were hedged and took profit on the shorts. And now we're trying to run back to the upside again now. I'll have to hedge if it moves down. And then copper, and that's looking fantastic with a tweezer bottom and a piercing candle reversal, pretty similar to platinum. Right, natural gas. I'm sure you'll be waiting for this. And it's been very boring, folks. There's not a lot to say, except for the entire week last week. That's encapsulated in this bear flag. That's the entire week, a week-long bear flag. Now, everyone's saying, well, we've broken through the bottom now, and so we're moving down on natural gas, and we should be selling. Not so fast. Not so fast. So what I want to do is draw this, excuse me, alleged bear flag, and let's draw it. So there we go. I'm going to try and draw it fairly accurately along the top. That's beautiful. And there it is. Now it's a channel. A flag is a channel, right? I think we could do this a little bit better. Let's just try and make this as perfect as we can along the bottom and not so much the top, because excuse me, we're dealing with the bottom, right? So we want the bottom line to be accurate. That looks very accurate to me. Right. Have we broken down through the bottom? We have not. This is the 4-hour chart on natural gas. I got long over there. Sorry, I got short over here. So my initial position was short, but we broke out through the top on the third final candle on Friday. So that was the last candle on Friday that tried to get down through the bear flag, alleged bear flag. The penultimate candle on Friday was the bearish candle of the whole day. In fact, the most bearish candle we've had since Monday. So Monday was pretty bleak, bearish, and Friday often sells off, as I said in the last video, but we haven't broken down through the bottom of the bear flag. We're likely to gap, and the weather's been cold. And the storage report, although it was on Thursday roughly around expected, was still pretty. The amount of drawdown off storage was pretty steep, as you'd expect at this time of the year. So we've had a cold weekend. We had quite a healthy drawdown on storage. I think that natural gas is moving into a higher range overall, that we should be trading between roughly $3 and $5, maybe $5.50, maybe with an extension down to $2.70 or $2.80 at the worst. But generally, I'm positive on natural gas. Let's have a look at this chart now. There's a couple of gremlins on the chart too. Now, first of all, we've got a gap down below us. Let me just see if I can find that. No, let me just go back to that 4-hour chart. It's not me that's lagging. I think the charts are lagging. I think maybe it's TradingView. Right, now, folks, this is really important on natural gas. To the left here, we have a hole or a gap that needs to be filled. Natural gas normally fills all of its gaps, and this one has not yet been completely filled as far as I can tell. I'm going to draw a line along the bottom where the bottom of the gap is, and that is literally over there. That's the bottom of the gap. Now let's zoom in to see if we tagged it, and maybe that's close enough. I don't believe in close enough when it comes to gaps though, and we're about 2 or 3 or 4 cents away from the gap. We didn't quite close it. Maybe that's good enough. I don't know. Probably is, but maybe not. And maybe we've still got to fill that. And maybe that's what's beckoning the price down, apart from weather and demand. And don't forget, there's industrial demand. We've seen the PMI improving last week dramatically, above 50. We've seen the stock markets rallying. We've seen industrial output improving. We've seen all sorts of good economic indicators, which might mean that industry, manufacturing is on the rise. And that's generally the Trump plan, right? So manufacturing on the rise means natural gas on the rise. It's not just weather. But we have this little gap down below here, a couple of cents. Does it need to be revisited? The chart's saying, yeah, I'm heading down there right now. And we're just going to kiss that goodbye at $3.13, $3.12 or 13. Kiss that goodbye, come back into the channel, get above the moving averages, and then deal with this massive weekend gap. It's not a roll gap. It's not a contract roll gap. This is a weekend gap, and we're going to have to fill it. In fact, my suspicion is that this weekend, in a few hours' time from now, we'll gap up rather than down. That was a tickle through the channel bottom or the bear flag bottom just to spook everyone out a bit, maybe, and that we'll gap up and give a go to getting through the top here and probing into the gap. This gap's so big, so massive, so unpleasant, and it's overlapping over a big contract roll gap as well. So it's not great. I think we need some volume in there. We need some action in that space urgently. And so natural gas is going to have to get up into there fairly soon, right? So maybe it's not today. Maybe we do have to test the lower gap first. Maybe we'll gap down. Like I said on, what else was I talking about? Was it silver or Bitcoin? I can't remember. We said we might gap down, stocks or something, gap down and then continue up. I think it was the NASDAQ or the S&P. But let's go back to natural gas. So maybe we just gap through the bottom here and tag that level, fill that last couple of cents in on the gap down to about 311. Maybe we overshoot it. Maybe we get back down to all the way down to the bottom, all the way down. And if we do get down to the bottom at $3, I think we're going to have to go through it because there're going to have to be some liquidations if that does happen, I imagine. So it's either down to below $3, I think, on this move down right now. If we gap down, keep moving down, or just stay where we are and keep moving down, I think we'll get to $3. Fill that gap at about 305, 303, down to $3, and we may as well just get down to 280 or 290 if we get down to $3. that's one scenario. The other one is that we gap up and we start doing our business and filling this gap above us right away. And we do that, tonight. We start off that process tonight. So yeah, that's my thought. I'm fully hedged, so I don't really care on the futures. However, on the continuous contract, I'm long. And I'm long on this one because there's the massive gap once again. We came back down to a Fibonacci retracement level, and I wanted to trade, but I didn't want to trade the futures ahead of the weekend. So I took a very tentative 10% small long on this, and the same applies in terms of the analysis. What was I trying to draw? A fib retracement. Now, there's a little double bottom down here, also on the continuous, like we have on the futures too, that sparked off this rally. If I take the fib up to the top there, like that, I just want to, okay, that's all right. We came down to the 50% retracement level. We were below it for some time, tried to get above it, rejected, tried to get above it for the second time, held it all the way along here for, like half of last week. And then on Friday, we bounced, we started moving up. And there's the gap, the same gap we see on the futures chart is above us here on the spot price. We started moving up, and then we collapsed back down again. That's what spooked everyone. The second last candle on Friday. But here, we've not got a flag. If anything, it's a rectangle, right? Maybe it's a flag. Let's put a little channel there too. This is the continuous. Now, oops, don't want that one. I'm long on this one, and I'll have to decide what to do with this one if it moves down. Whereas on the futures, I'm fully hedged. This is very, very similar, folks. So we've got a top here, a little channel, just drawn in the top of the channel, and we're just running along the bottom of the channel. And if you look at this in some detail, you can see we spiked through that bear flag bottom, weakening the bear flag, but not holding below it, not closing in there. And if I go to a 15-minute chart, you might see what's happened. We poked through there, formed a inverse hammer, a bull candle, and then held the level on the futures, on the spot. Remembering that I'm long from over here at about 450. We're currently trading at 443. So about 10 cents away. So that might just be okay. I don't know. But let's have a look at the futures and see if that managed to, yeah, it did. So the futures as well managed to close back inside the channel, although below the 20-period moving average on the 4-hour chart. So it's all up for grabs, folks. I don't know what's going to happen next, but I think it's basically a genuine 50-50, genuine 50-50. And if we move down, we probably have to get to $3 and below $3, gap down there a little bit, faff around, take out some liquidity around the $3 level. And why do I think that could happen? Well, let's go back to the $3 level and see what happened. Let's have a look at what the market did when we got there last time. It's a little double bottom, and the lowest point of that is just below $3, 22999, all right, just below $3, and that candle was just at $3. So $3 vigorously defended, and yeah, an important number. So if we do get back down there, I suspect that we'll have to take some liquidity out below. Now, last thing I want to look at on this page, by the way, uranium, I'm still long on, even though we had a big, massive drop-off on uranium. If this shows signs of strength and we get back above the 20, it'll give me a chance to add some more uranium onto the longs that I have already from quite low down, and it'll give me a chance to top this up at a slightly lower price, because we did get a little bit ahead of ourselves with that rally. So if we can show some evidence, some more signs of clear strength around here, I'll try and top up my URA. Lithium as well. I have no position on lithium. It's another one I want to get long on. We've been long often on lithium from the lows, taking profit quite regularly. I don't trade this one a lot, so I don't know its personality, its character, and what it's likely to do next. So we've been taking profit, at these gray arrows whenever possible. And now we're out of the market looking to get back in. We have a beautiful bounce on Friday with a gap, but we're still below the 20 period there. So let's see how next week looks. And then WTI oil, I'm still short on this, and I haven't got anything else to add since last week because we've done very, very little really. So 1, 2, 3, 4, 5, 6, 7, 8, 10 days. We almost basically 2 weeks. We've been stuck at this higher level after rejecting the order block and that swing high 3 times, and each time slightly lower. 4 times, each time slightly lower, although it might be forming a bull triangle. For now, it just looks like it's moving down. So generally, I'm fairly ambivalent on oil, actually. At this sort of price level, close, between 50 and 60, it's very difficult for it to move down. I'm looking for a trend line because it's pretty cheap, and buyers will be sniffing around vigorously at these sort of price levels. And so, it's difficult to move down. But I think generally, every time we move up on these war events, or every one of these spikes has got to do with war in the Middle East, bombing in Hormuz, something going on in Ukraine, Russia, sanctions here, there, Iran, you name it. Every one of these spikes has been a result of geopolitical tensions, and every single one of them has failed, and every single one of them has been lower than the previous spike high. So yeah, maybe we need to get back up to that trend line and this order block, probably now, the way I'm looking at this. So I'd be looking to sell more oil, and we're already short. Average price, I think, about 62, but I'll be looking to add at about 69 maybe at the underside of this trend line and into the next order block and point of control. That would be a much better place to sell oil. I don't know if it'll get there, though, and we may not even have a chance to sell more up there. We may just reject here. We'll see how we go. We don't have a massive position on there either. Generally, folks, I'm trading fairly small positions at the moment. And for those in the private group, you'll know that very often it's like a Bitcoin, I took a 2.5% position on Bitcoin on Friday, trying to pick the bottoms at around 60,000, adding very tiny portions of Bitcoin on there. But generally, I go for like 10 to 20%. Whereas last year and the years before that, and these are just, these numbers are not absolute numbers, they're just guidelines. I'll be trading at more like the 20 to 50% level about a year ago. These markets have become increasingly volatile and difficult to trade, particularly over the Christmas period and into, and of course, we've had all sorts of stuff going on, like you cannot believe, not just geopolitical, but tariffs and other stuff going on, and major country stuff, including stealing the president of Venezuela. So super interesting. Bitcoin gold bouncing out a little bit, still below the trend line, so not much excitement. Bitcoin dominance fell down. Altcoins would have liked that, but surging back up again, so altcoin traders will be miserable about that. Dollar rand moving down. Looks like we're trying to form a base here, folks. If you are trading this, I'm no longer trading it. Last time I tried to get long was over there, and I have no inclination to do so. I have no understanding of why this is moving down, apart from discovery of rare earth metals and minerals and oil off the coast of Southwest Africa, Namibia, and various other things. But the fight, the feud, the political feud going on between South Africa and America, you would think, and the taking away of aid and slapping on of tariffs against a country which is already crippled financially, this country, South Africa, and yet the rand continues to strengthen. This chart moving down means a stronger rand, a weaker dollar, not the other way around. It's inexplicable to me, and I think sounded German, that there are some nefarious forces at work. And then onto commodities. I'm trading far fewer commodities this year. Last year was a total boredom fest on commodities, nothing happening. And I'd rather use my money to trade other stuff, which is more exciting, frankly. But we do have some longs on wheat. We took some profit on Friday too. We took profit on soybeans and wheat. We still have a corn and a cotton trade on, but we took profit on those. And then cocoa, I also got long on cocoa actually, but I hedged that immediately the very next day. So we got long there. Where did we get long? Green arrows here somewhere. Got long and got hedged, probably in the same day actually. Let's go to the 4-hour chart. There's the long and there's the short in the same day. That's slightly lower. So no real position on cocoa, but I think we could get a bounce out of here, a little bit of a bounce. Let's quickly go back to that day chart and then move up into much more of a better selling area. And I still want to get short at some point. Last time we got short was way up here. I'm not going to be shorting at this low level, but I might have a go into this cluster of order blocks and swing highs. But actually even better would be a move back up into Cocoa Moab, mother of all breaks. Double bottom, smashed by a breakdown below that double bottom with a gap. As I said to you on many occasions, the markets often gap through difficult parts. When it doesn't think it can get through there easily, it'll gap through there and force through there on the weekend or whatever, or on the contract roll, whatever it might be. So maybe we can get back into the gap, into double bottom, smash down through there. We've not retested that smash down gap yet, and so probably needs a retest. Hence, I got long here, but now hedge. But if that moves up, we can release the hedge and let it go up towards that Moab line. And that's it, folks. I've been talking now for a solid hour, so I'm now, as usual, fairly worn out. I hope that was useful to you and that you found some useful information from that. And trading with, I don't trade funded accounts, Emil. Never traded one, never will. I trade my own money. Yeah, charts were lagging. I think the charts were lagging. Yeah, sorry, Akshay, mate. It's not my fault. I think it's either Streamlab or TradingView. TradingView, not laggy, perfectly good. So some lagging, some not. Okay, that's no problem. I think we're okay. No, yeah, as I said, no, I don't use. I've never tried a funded account actually. Maybe it's something I should do. Can we get Bitcoin into the 50? Yeah, like I said, Vishesh, maybe, mate, maybe. Like, let's go back to that Bitcoin chart. All I can say to you is what I said on what I wrote on this chart. This to me, and I think the FUD is the FUD, F-U-D, fear and doubt. I think the FUD is so strong that we may have blinkers on now at this point. I certainly have, looking at this market thinking, no, I don't really want to be buying. I don't want to be committing. I have bought. I bought it just around, the lows, as low as I could get. But I've got fear and doubt, and I don't know if it's going to hold. And we've seen Bitcoin being absolutely brutal in the last few days. And this is not long, right? This is since the middle of January. We're only at the beginning of. We're not even into February yet. So this is the 14th of January. 2 weeks. We've moved from 98,000 to 60,000 without a bounce. And there's every feeling, we've had a little bit of bounce, there's every feeling we could do just the same again and move down another 20, 30,000 without a bounce. And unless the fundamentals and the charts and everything are all aligned, and I don't know if they are, I don't know what's going on with MicroStrategy, I don't know what's going on with Ethereum treasuries, I don't know what's going on with the US Treasury Reserve, I don't know what's going on with long-term hodlers who are selling, I don't know what's happening with retailers who aren't buying because they're scared to hell of Bitcoin. IBIT has seen the biggest outflows so far. There are no buyers around unless they crept in with violence at 60,000, and we just don't believe it yet. And they're there and they're not going anywhere and they're here to stay. Maybe that's the case. And then we're moving up and not down from here. But if that is the case, I'm just going to finish off on this, by the way. I must just point out, I think one of the more likely scenarios is that we don't defeat the low over here, but we have a go at approaching it. And so I think that maybe a couple of things could happen. If we do start moving down, and maybe we won't, but if we do, where's my arrow? So annoying. If we do start moving down, and we've got two reversal candles here on the 4 hour already, by the way. That's a little spike high, little spike low, one up, one down. Doesn't look good already on the 4 hour. And, market's only open in a few hours' time. But we could get something like that, I think down to about that level there at the top of the body of that tweezer body candle, which is at about, let's see, 62,000. So maybe a very sharp correction to 62 like that, and then out. Probably back up to the top here. Probably not going to be easy. It's going to faff around for a long time. And as I said to you, I want to point this out to you. So that's one scenario. I'm expecting that to happen. And therefore, I haven't loaded up the boat for longs. I'm going to try and buy some more down here. A little bit more, not a lot. I've only got 5% longs on from these lows. So maybe I'll add another 5%. And I've got massive positions much higher up, all hedged close to 90,000 and stuck there. And they will be stuck there until we get back to 90,000. Unless I take some of the profits off the shorts. But we've moved down. We could move down, or we might just sweep those lows, and those lows are at 60,000 precisely, and sweep the lows and make a V-shaped recovery like we've already done. Now that's a possibility, or we've already retested the 38% retracement. Let's go and put that on. I'm going to finish with this today, folks. Look what we did over the weekend. All right, let's just get this line a bit thinner. What we did over the weekend was we moved up on Friday, came down precisely to the 38% retracement level. We've bounced out quite beautifully with another potential bear flag, by the way. This movement, It's not very rapid. It's insipid, but it's the weekend. And so this is all just moving about. It's positioning the board for Monday, for tonight. So there we go. Could we move down? Now, I want to just show you one more thing on the weekly chart, which I actually forgot to point out earlier. And was it here? Yeah. So, oh, yes, this is it. Just bear with me one more second. Have you heard of a breadth thrust? Breadth, B-R-E-D-T-H, breadth thrust. Difficult to say on a microphone. Breadth thrust. And we see it in stock markets. We saw it on the S&P last year. It's a Zweig breadth thrust. And what it is a massive reversal, V-shaped recovery associated with a very unusual type of breadth occasion. In other words, across all the markets, massive market breadth and a massive V-shaped recovery. And we didn't look back. We had one pullback. This is a day chart, right? This is what happened on the S&P. Massive V-shaped recovery. And maybe we can use this as a sort of a guide for what could happen on Bitcoin. So we moved up to the level, and then we faffed around. We've already done one move down on Bitcoin to the 38% retracement. We faffed around for another few days, did one clear out through those retracement lows, and then bounced out of there, gapped up, and then we were off. That's called a Zweig breadth thrust because there are various reasons for the definition, but it's accompanied by large volume, increased breadth across the market, the entire market, and the V-shaped recovery, and just not looking back, just a literal perfect V-shaped recovery. Now let's have a look at Bitcoin. Now we won't have the same thing because Bitcoin is not an index. It's a single instrument, whereas the S&P is made up of loads of stuff. And when we talk about breadth thrust, we talk about everything moving up together. Here's just one thing, but we did see all the other ones moving up at the same time very dramatically. Particularly, someone asked about XRP, and all I can say on XRP, I'm still long on XRP. I haven't added any more, but this is the chart that you should be looking at on XRP. There's the original range, a massive rally out of here. It's a very strange looking chart, but we retraced exactly, not quite. And once again, a little bit like Bitcoin, didn't quite get to that 200-day moving average. And XRP didn't quite get to the 78.6% fib. And that would have been a good place to buy, even though there's still a little bit of unresolved volume below that and that swing high that might also, in other words, a retest of that high has not occurred. And there's a volume gap there too, which might need to be filled in. Nevertheless, we bounced off the 786, absolutely beautifully here on the weekly chart. And then going to the day chart, you can see we've held it pretty well too. So what I'm saying is the thrust of volume and enthusiasm and movement upwards was across the board on cryptos, not just Bitcoin. And although we can't categorically say it was a breadth thrust, it might be something very, very similar. The final thing I want to point out before I go is on the weekly chart, and I pointed this out in the video on Friday. We have a swing high. This is a weekly chart on Bitcoin. Swing high into that cycle with an overbought RSI on the weekly chart. We swung into an oversold RSI on the weekly chart, and that formed the low. On this cycle, we formed a high over there. We swung into the low and got into an oversold situation on the RSI on the weekly. Let's zoom right in because we were oversold. Maybe we're still below. We're at 29, so we're just below 30. All right. So that's the first thing. That was the bottom before, and this might be the bottom now. But if it is to be the bottom, and remember, it's very, very different because of the breadth thrust that I've just described to you, the way we bounced out of here. On this occasion, we dribbled around and no breadth thrust, nothing. Except for one thrust downwards, which took us to a new low. We moved along the bottom, thrust up again, and then that was the bottom. But my point that I want to try and make here is that this process where this RSI was oversold before we launched out, took us from the beginning of June, mid-June 2022 to January 2023. So 6 to 7 months this bottoming process took. On the occasion that we're finding ourselves in now, it may be completely different because we did not have this massive breadth thrust out of the bottom. And there's the RSI down in the oversold condition. And if we just use that blob that I drew on the previous occasion and put it there, we may only exit this low or this zone, the lows at this bottom, where the RSI is oversold, in July this year. So that's, 6 months from now. However, having, with all of that in mind, I'm going to keep this little note in here. Such a clear bottom. And I'll eat my hat, and I'll have to eat a few in the future. If this, in my opinion, if this doesn't hold, even if we have to make a fractionally new low, which I think is even that's less likely, I think we may try another little sweep down to the 50% retracement or the 618. That's a little bit further down below the dip we had on the weekend, and then up. That's what I think is most likely to happen on Bitcoin. And not that I'm a Bitcoin expert, by the way, and I'm not going to be competing with the Bitcoin crypto boys over on the big channels, because it's not my game. It's not, I'm a trader. I trade all instruments, and I'm not obsessed with Bitcoin, although I save my money in Bitcoin. I like trading all sorts of things. And yeah. Thank you, Vishesh. You're a very good person too, with my interaction with you in the private group. Get off the stage. That wasn't me, Vishesh. That was the Nightbot. MCX. I don't trade on the MCX, Ruchi. I don't have those charts up. I don't trade them, and I don't watch them. But I think what I've already commented on should give you a very good idea of how to trade your MCX charts. Folks, have a wonderful evening. For you in the US or on that side of the world, you've got a whole day ahead of you still, now that you've wasted an hour with me, but you've got the rest of the day. Go and do something fun. Go and have a nice lunch if you're in New York. And if you're in California, anywhere near Newport Beach, go and check out the waves at the Wedge for me. It's my favorite surf spot in the whole world. Take care. See you soon. Hi there, I'm James. I'm the founder of ArcisFX. I'd like to personally invite you to join our 24/7 trading group. This is built for traders who want an edge. Inside, you'll get access to live calls on Forex, commodities, crypto, energies, and metals, along with exclusive daily analysis designed to unlock your trading potential. And this in both traditional and now in digital markets. I'm talking Bitcoin, crypto, altcoins, and tethered currencies. You'll gain early access to insider news, real-time updates, real-time support, and premium educational content. If you want to sharpen your skills and boost your success rate, then join me and Paul in this community. This is a fast-growing community of traders who are now writing their own success stories. So don't wait. Join up now. Your edge starts right here.